Hey guys, Florida Mortgage Gal here. Welcome back. Today I have a very exciting topic for you guys. So if you've been struggling to qualify for a home, listen up. Today we are talking about a new announcement from FHA or from HUD about FHA loans that are going to make FHA loans much more affordable for people. Let's break it down. But before we get into it, I want to take a little bit of time to explain the background. When you get an FHA loan, there's two types of mortgage insurance. And I should probably do another video breaking down all the different types of mortgage insurance, when you have it, when you don't, that kind of thing. But in the meantime, let's talk about the FHA mortgage insurance. On FHA loans, there's two types of mortgage insurance. You have what's called your upfront mortgage insurance, and then you have your monthly mortgage insurance. Your upfront mortgage insurance is actually not paid inside of your monthly payment. It is just like what it sounds, an upfront chunk. So it's typically 1.75% of your loan amount that's rolled back into your loan. If you have a home where you're buying it for $300,000, well, you're an FHA loan, typically you're doing a 96.5%, or it's 3.5% down, so you have 96.5% of that $300,000 as your loan amount. That puts you at $289,500, okay? Now, you would add 1.75% of that, which is $5,066 back into the loan amount. So you would add your first amount plus the $5,066, and then you would have your total loan amount. There are times where that mortgage insurance gets prorated and forgiven if you do a streamlined refinance. In most cases, you actually end up paying that money to FHA or to HUD when you sell the home, because it's added to your principal amount. So when you're paying off your loan, you're paying off that upfront mortgage insurance as well. Not only that, but you actually are paying interest on that extra $5,000. In this scenario, it's $5,000, in addition to the interest on your loan amount. It is some extra money on FHA, which is part of why I want to do another video comparing the two. On conventional loans, you'll never have that upfront mortgage insurance rolled in. There are times where that upfront mortgage insurance does adjust. I mean, I'm going off of, for both the monthly payment mortgage insurance and the upfront, I'm just going to be talking in generalities for this video. Most people that are doing an FHA loan are entering it at 3.5% down, okay? So these are going to be the rules for that situation. With that being said, that monthly mortgage insurance is a straight line, which is part of why FHA is such a good option for so many people. Because in other types of loans, conventional namely, the mortgage insurance amount that you pay is going to be impacted by your specific factors. What is your credit score and what is your loan to value specifically? In FHA, it's pretty straightforward. It doesn't get impacted by your credit score. It's just a certain percentage of the loan amount based off of what your loan to value is. So again, for most people, we're doing 3.5% down on FHA. Historically, your monthly mortgage insurance, and this is on top of that big chunk mortgage insurance, but the monthly mortgage insurance amount, you could find it out by doing 0.85% of your loan amount divided by 12, and that's your mortgage insurance. That number is also calculated before you add the $5,000 back in, or that upfront PMI back into your loan amount. It would just be the direct number. Let's go back to that scenario where you have a $300,000 purchase price. 96.5% of that would be the $289,500 again. We would take 0.85% of that, divide that out by 12. It's a little over $200 a month. So 205.0625 if you want to be precise. Now, here's the big news on it all. HUD announced that they are going to make these FHA loans more affordable now. They are going to take it in that scenario from, instead of it being off 0.85%, now it's going to be based off of 0.55%. Huge news. So if we take that same loan amount, that $289,500 times 0.55%, divided by 12, that brings us down to $132 a month and 86 cents. That being said, that is a huge savings on your monthly payments. That's about $70 a month that you're now saving, and you didn't have to do anything. FHA just decided that they wanted to make their mortgages more affordable for people, which is a great piece of news in today's environment where it seems like groceries are just more expensive every day and interest rates are going up and all of these factors that are just making our lives more expensive. It's wonderful to hear something positive like this coming from the housing market and from FHA specifically, as they are the most common loan type for first-time home buyers and people just entering real estate, people with lower credit scores, people that might be struggling a little bit more. So wonderful, wonderful news. There's a lot of other caveats to this. This is not a one-size-fit-all. There's actually times that it's going to get even less than the 0.55%. right? If you're doing 10% down on an FHA, it went down from 80, or it was 0.8 that you would make that calculation on. Now it's 0.5, so it's a 30 basis point drop. There's other types of FHA loans where the drop is a little bit different as far as the end result, but for most people, that's what's going to apply to you. Congratulations. If you haven't been able to be accepted or approved for a loan recently and you were in the FHA direction, maybe reach out to a lender again and see if it's something that now it fits, because I know for me personally, there's several people that were just over on the qualification or just couldn't afford the payment that now can. So hope all of this helps you guys out. Have a great rest of your day. Bye.